Good morning. Thank you for everyone for our second presentation in the series 4 in the cannabis marketplace. Before I introduce our amazing, one of the best in the world, we have a broad spectrum of presenters for you. We're going to do some thank yous. So thank you to our sponsor, Mood, Hardworking Cannabis. Mood is an online dispensary. They are being a sponsor for all 4 partners. And so we include the 20% code. You can click there and unlock this special offer. Also to learn, and also max assets. And so one, you can learn kindergarten to 12th grade and to perfect your skills. And also if you have any type of debt or that is here to help you out. We're that we have changes daily. None of this is legal advice. This is, we understand, still federally illegal. We acknowledge that. This is just an information session, and so please read over this disclaimer. Our panelists, I'm going to have each of our panelists do a short introduction of themselves. We're going to start with Norm. Norm, hi.
Hi. Norm Ives. I'm a wholesale insurance broker and cannabis practice leader at Amwins. I've been in the cannabis I've been insuring cannabis businesses in this space a little more than 10 years. Helped bring some new carriers and capacity to the space, and excited to be here and talk with you today.
Great. And on the circuit together, so I know you have a wealth of information for everyone, Norm, and it's good to see you again this morning.
Thank you.
Chantel, and also she and I have a long history of presenting together. She's got a couple of amazing books available. So Chantel, please tell us about yourself.
Hi, I am Chantel Roberts. I am a consultant and author, a professor about insurance and risk management. I have handled cannabis claims before, so I come at this from a claims background.
Wonderful. Great. I'll give a shout out and a review for your books.
Thank you.
Everyone should get one. They're available on Amazon, I believe, if I'm still
Yes. And both of them you can actually get at bookstores, regular bookstores too, in addition to Amazon. So they're everywhere.
Everywhere. If you leave your house and don't just online.
There you go.
A book. Wonderful. Thank you. Bernard, also on the circuit with me. We've done some speaking with each other. Hey, give us your 101, Bernard.
Good morning, Ben Schulte. I am the Vice President of Corporate Legal and Risk Management for the Cannabis Company, which was formerly known as Columbia Care. Currently, we're in 15 states. We're a vertically integrated multi-state operator in the recreational and medical cannabis industries. I sit in Colorado. I was general counsel for the Green Solution, which was acquired by Columbia Care. So I've been doing risk management in the industry for about 6 years. Before that, extensive experience in automotive and industrial truck industry. Again, risk management issues, working with insurance carriers on coverage issues in all highly regulated industries.
Great. Thank you, Ben. Me. Hi. Some of you
Hi.
may have met me last week. The moderator. If you haven't, I'm Melissa Roeder. I'm based in Seattle, Washington. I am what's called of counsel. Basically, someone's been around the block for a while. To Mosca. For the cannabis world, I do a lot of speaking. I do a lot of policy and procedure employment manuals, product liability work, premises liability, advising dispensaries, growers, extractors. So if you have a problem, and if you are insured or aren't insured, I'm still available. And my contact information is on top of the page for you. All right. Risk in the cannabis marketplace. We're talking about kind of a roadmap. Is there insurance available? If it is, what kinds? What can you get? How much does it cost? Is it hard? Is it expensive? We'll chat about that. What kind of claims are we seeing? Yeah, able to tell you about that. I am monitoring your questions. And so if you have questions, I should be able to see them, and I will happily read them to our panelists, answered for you to the best of our abilities. We do have 3 or 2 more presentations in this series. I believe the 9/26 date is going to be changed, but we'll be talking about dispensaries. We're also going to be talking about banking and finance and about brands. But coverage one. All right, panelists. First question that we have. What do you need to look for when you're looking to buy a policy? And for me, it's what are you looking for? What aren't you looking for? And what are the pitfalls that some of our audience members need to be aware of? So
I can go ahead and jump on in. Again, looking at it from a claims point of view, one of the things that I worry about with our insureds and our policyholders is, of course, that they have the proper coverage and they're getting the coverage that they want. And this is where Norm and Ben would come in. But a lot of times what I'm seeing is the definitions don't necessarily match what they, being the insured or the policyholder, needs or wants. In fact, Norm was just telling us off camera about an exclusion or an endorsement, I believe it was, Norm, that you said it doesn't cover for any kind of respiratory illness. You know, it like doesn't say what that definition is, how we define that. And I get very nervous because I've spoken quite a bit about the normal definition of what cannabis is. And if we are using we want to cover hemp, but we don't want to cover cannabis, it gets into a very circular argument, in my opinion, because of the way that the policy has defined cannabis.
yeah, that's a broad term, right? I mean, if you have a marijuana product, is that covered?
Yeah.
And so
Correct. Yeah. Yeah. No, I mean, I mean, Chantel hit the nail on the head. I mean, I would say step one in looking for what you look for in an insurance policy. First thing I'm going to say is find yourself a capable, competent broker that works in this space. I'm a wholesale broker. I can't, and so I can't write directly with guys, but when you're dealing with an end insured, make sure, that your agent, make sure that you're not their first cannabis business, that they understand the space and that you're seeing multiple options, because the insurance options available to a hemp company, to a company that is making farm bill compliant products, are very different insurance policies than what's available to regulated cannabis. And the two don't necessarily mix very well. There are a number of insurance carriers that only want to write marijuana businesses. They understand that segment of the business. They like the heavy regulatory arm that's there. And so they're comfortable only dabbing in regulated cannabis. And then there are carriers that are like, hey, I'm okay with farm bill compliant stuff because it's federally legal. And so my counsel feels better about hemp derived products. So I'm going to play in this space. But you need to get yourself to a broker so you can have the confidence that you're being presented all the options that are available to you, so that you as a business owner can make an informed decision of where do I want to participate in risk and where do I want to pay to make it go away.
That's a really good point. And as somebody in the regulated cannabis industry, having the broker know what they're doing is key. I want to touch on something Chantel was talking about, the exclusion there. That's in the product liability sphere. And I think product liability coverage is one of those cost benefit decision making questions that every cannabis business has to look at in a very fact specific way. I know that the smaller operators may forego that coverage because premiums have been historically high, and return, especially with all the exclusions, has been typically very low. One of the other things that having a good broker can do for you is getting good industry benchmarking, and things to look for there would be, what industry are they talking about? Is it agriculture, pharmaceutical, in the dispensary context? Is it based on pharmacies? And then the individual entity needs to decide, where do I want to be? Do I want to be in the middle of the spectrum? Do I want to assume more risk, or am I completely risk averse, in which case you're spending a lot of money on premiums? So there's a lot that goes into choosing the coverage, having a good broker who, like Norm said, it's not their first cannabis client, somebody familiar with the industry, because there are more and more carriers getting involved. You have to know what the difference is between their policies, and a lot of times you'll get a low ball, but the exclusions will kill everything. So you're paying less money, but you're getting far less coverage. I see heads nodding.
Absolutely. Yeah.
Yeah. What I've seen from the attorney perspective is playing it on both ends. You need to be forthright about what your company's doing and what you're handling. And that's on you. They made claims, but didn't fully disclose what the business was doing. It was very broad and general. And I've seen claims excluded for that reason. That may be on you for not being forthright. On the other hand, I've seen policies that exclude criminal activity. It's federally illegal activity. That. So then there have what do you have, what do you need, what's being offered, and what isn't included. So
Your mention of criminal activity, we were discussing before, crime policies where dispensaries are the new Wild West bank robberies. You have smash and grabs. You have people stealing the ATMs out of the lobby by breaking the windows and throwing a toe strap on the machine. You have issues with coverage regarding where the cannabis is when it's stolen. If it's in a vault, then it's covered. If it's on a display case in the sales floor, it may not be covered.
And Ben, that goes back to, again, the policy language. And I know insurers, carriers are loath to give away their policy language and show you what their policy language is before you sign up. And again, this is what Norm was talking about. This is where you need to get a really good broker or an agent who knows that language and can help you. Because by the time that it gets to me at the claims, it's too late for you, unfortunately. Which is why I like to talk about the definitions. You know, it's like, oh my gosh, y'all got to look at this. You know, pay attention to your exclusions and pay attention to what is being covered and what's not, because it is, I've seen these things where you have to have a 300-pound safe bolted to the floor or a 500-pound safe. And there's coverage for smash and grabs if it's during the business hours. But if it's not, then it does need to be in a vault. Or, you know, you not only have to have a burglar alarm, because apparently, I mean, amazingly, marijuana gets stolen a lot, but you also have to, I mean, yeah, go, it's amazing. But then you also have to have a backup battery, because also amazingly, it's your employees or your ex-employees that steal the stuff after you've fired them. And you got to change the code, guys, too, which is probably not one of our questions, but there you go. That's my free claim advice for you right now.
Well, that dovetails into the fact that with every policy, especially if you're a multi-state operator, and within places like Colorado, every municipality has its own rules. They review your building permits. They review your camera codes. We have spaces, a dispensary can have 60 cameras inside and out, everywhere but the bathrooms. And you have requirements, like you mentioned, battery backup. You can get fined if you don't have 90 days worth of backup on your video, and that's 24/7, 60 cameras. You're talking teraflops of information that you have to store. And if you don't, if the underwriters or if the adjusters can't find out where the fire started or who came in, you're going to have some issues with your claims.
Absolutely.
Melissa's on the next slide.
Well, we've chatted about this a bit, and space, or do you want to be in that space? Last week, our speakers and to our audience, but what's the difference between being in these two different spaces?
I mean, I'll kick this off just from a, cannabis is really beginning to segment into multiple industries at this point. I mean, you're seeing a separation in the product stream, the quality of products, the types of products, and where the products are available between Farm Bill compliant hemp and medical or adult use recreational marijuana. And so when we talk about traditional marijuana, whether it be medical marijuana or recreational, what we now refer to as adult use marijuana, you're dealing inside of typically a fairly heavily regulated structure with strict testing requirements, security requirements has been alluded to. I mean, by the time these dispensaries open from an insurance standpoint, I love telling insurance carriers this building is pretty much pre-underwritten for you, because by the time this dispensary is open, the fire department's been through, your electrical's been inspected and been upgraded. You've already had to upgrade your HVAC system to be a better air handling system, not because you're smoking inside, but because you're worried about smells and particulate matter and upsetting neighbors. And so you've got and you've got all these cameras everywhere, so it helps you adjust claims for trip and falls and things or things that happen on the backside. You have a fact pattern that you can fall back on that's available from multiple angles that helps in these things. Versus when you get to Farm Bill compliant hemp products, you're now seeing the industry move from what used to be CBD for joint and ache pain, pain, into they figured out how to manufacture THC, tetrahydrocannabinol, the intoxicating ingredient that's in marijuana. They figured out how to manipulate it and manufacture it out of CBD, of which they have a lot of stock out there. So you're now making these marijuana looking products, these synthesized products. They're called isomers when they make some of these derivative products. But you're now seeing these Farm Bill hemp products get made and are available to the general public. Minnesota was out in front of this early on. They allow hemp-derived products to have up to 5 milligrams of THC. That's your standard edible in a lot of dispensary environments. You can buy that in Minnesota at the grocery store, the liquor store. Heck, you go to the golf course, the beverage lady comes around and asks you if you want liquor, beer, or THC seltzers. So the THC is available through Farm Bill compliant products in places that you don't traditionally think of marijuana products being available today. And that creates insurance challenges in the current market. So it's important to understand where you are in, you know, in the insurance world. Are you a regulated marijuana dispensary, or are we dealing in the Farm Bill hemp side? And let's make sure that we're getting insurance products that are designed for the industry we're in.
Yeah, so many things. Ben, did you want to go? Because I can jump in too.
Now, just from a risk standpoint, as Norm mentioned, the THC products are smokables especially are tested for lead, pesticides, biologic contamination, potency. You know what you're getting, and it's highly regulated as opposed to what, and it's moved from what we used to call hot hemp, which was not, it was sold as hemp CBD derived, but it still had too much THC in it. Now with the new technology and the synthetic THC, you're getting around the regulatory side of it, but you still have all of the product liability risk. You still have all of the other risks from having a store. I did want to touch on the other side of it is, as opposed to retail, is the wholesale side, the manufacturing side, where if you have an extraction system, there are huge risks there from a general liability, casualty, and product liability side, because you're manufacturing, you're using high pressure vessels, using propane still in some instances. I don't know how that relates in the Farm Bill side, but those are big risks to look at when you're in an integrated or vertically integrated sales model like we are.
Yeah, so coming in again afterwards, from the claims point of view, because those gentlemen would have sold you your policies and taken care of you, and now you've had a claim, unfortunately, and it's been handed off to me. We've got a couple of different issues with the, of course, the adult use or medicinal use of it, of marijuana, depending on what your state is. You could have the issue of money and banking. And I'm sure we're going to get to that later, or there might be even a different talk about that. But it's still a cash-based business, honestly. And whereas your Farm Bill compliant stuff is not. I mean, now it's federally legal, so you can have a bank account. Not that the distributors can't, they do and everything, but it's different. And so they're carrying a lot of cash. So the insurers, the carriers, need to be aware that there's a lot of cash on hand. If you are a grower, with marijuana, you're growing that inside. So if there is a fire, then smoke, of course, and you could end up losing a bunch of crops, because it's not like an apple or anything where you can just polish that smoke off and still send it off. Now the whole crop is ruined. So, you have lost crop, even though it may not have been burned, whereas your farm hemp will be outside. And even and there is, because hemp smells a lot like marijuana, obviously there are people trying to steal hemp. And I've seen the signs up in, for example, Vermont, I think it was, where it says, "This is hemp, guys. This is not marijuana. Please don't steal it. This is hemp. It will not work out for you if you smoke it." So there's a lot of different things that you're looking at from a claims point of view when you have the distribution of marijuana versus the distribution of hemp.
You also, and I think, Melissa, this might segue into your next section on available coverage. Almost nobody is growing commercial marijuana outside.
That's not
we
correct.
shuttered
That's not correct. There are a number of outdoor cultivators in multiple states. The quality of the product or the price point may be a little more effective, but there is a robust outdoor marijuana market, and there is a definite industry niche that follows and appreciates that product for what it is. So I would have to correct you there. There is outdoor cultivation for sure.
That's interesting because I was like, Ben, I had not heard of that, but I did hear you do have to watch out if you are growing marijuana outside because it could cross pollinate with your hemp and then
Correct.
and then you would get hot hemp.
Yeah.
And I've heard all sorts of things like grow sunflowers around it
Well,
because then it gets like really tall and you won't have that cross pollination, but that's something to be thinking about. So
Yeah.
interesting. Very
Correct.
interesting.
Yeah, no, I mean,
So-
it depends on the climate. I mean, it is a climate specific conversation. I mean, in the northeast corner of the country in New York and Boston, I mean, I know some outdoor growers in New York, and it is not an easy task to try to grow outdoor crop in that environment up there. It lends itself to more indoor cultivation. That is more the way the industry is geared today. It's more repeatable, predictable, scalable production. But there is an outdoor cultivation. But I mean, there's differences also in what's available to you in insurance. I mean, by and large, there is no crop coverage for outdoor cultivators of regulated marijuana. There is some limited federal crop coverage available for Farm Bill compliant hemp. But,
Yeah.
I
And
mean,
even
we've got very different industries. Again, it comes back to understanding what niche you're in and to Chantel's earlier point, the definitions of
even
what it is.
indoor.
The Farm Bill makes it very clear. The 2018 Farm Bill says marijuana, or it becomes marijuana when it has greater than 0.3% THC by dry weight in its harvested time frame. It's like within a week of harvest, and it schedules that very quick. But the magic number is 0.3% THC at the time of harvest. And this whole Farm Bill hemp industry is derived from what they do with it after they harvest it. It becomes a Farm Bill compliant product because when the product was harvested, it was Farm Bill compliant product. Or if we're dealing with regulated marijuana, it's product that was always born, raised, cultivated, and has only lived within a defined system typically.
So talking about that
Super.
and focusing back
I'm
on
going to interrupt you, Ben.
indoor grow. Go ahead.
2 points. We have an audience question. The audience would like to know how involved, if at all, is Wall Street? What's happening on?
I can address that a little bit. My company is publicly traded on Canadian exchanges. Right now, there are no cannabis companies on the US stock exchanges because it's not legal federally. We are ready. The companies are becoming, and I know from experience, we are becoming NASDAQ ready, SEC filing ready, but so 10Ks are being issued, things like that, but we are not allowed at this point to be on the US exchanges. So the ultimate parent company is Canadian with no Canadian operations.
We are going to talk about that comes in episode, and so we can talk about what's available, money, forensic economy of value of businesses, etc. But going back to where we were, coverage available. First one was crop, and we've kind of been discussing that and what's out there. I'm just going to put these various coverages available just for sake of time watching us. And I'm just going to give each of you an opportunity about what you've seen, what's available, problems with it, costs of it. So Norm, I'm going to start with you on this wholesale. thoughts on these different coverages?
Sure. Generally speaking, most of these coverages are available to marijuana businesses, and I'll touch on a couple specifically. The differences is or I should say the thing to focus on or be aware of is the differences in the quality of the policy that you're getting, or the differences in the quality of the policy. These are not policies that are being put out by admitted carriers that have been vetted by the insurance commissioner and read through several times. These are excess and surplus lines policies. They're highly modified. In some cases, they're not even following traditional insurance industry ISO forms. And so they're using carrier specific forms that haven't been tested in court yet. So we're not really sure what they mean. And so you do want to be aware that there are differences in policy. So when I talk about crop coverage to a tomato farmer in Kansas, we're talking about a very different product than what's available for crop coverage for a marijuana cultivator. And so a couple of generally speaking, I would say D&O coverage, pollution coverage, crime coverage is all available in the general market today. The D&O market's gotten much better than where it was a few years ago. There are several participants providing better quality products than what we saw 3 and 5 years ago at more attainable prices with lower deductibles. One of the big holes or challenges in the industry that I see that is very unaddressed right now is impairment. Impairment coverage is generally not available. There's only a couple of carriers that are providing real impairment coverage. And to be frank, it's expensive, and there's not enough people buying it for the exposure. We referenced the Minnesota and the fact that you've got this model that allows you to have 5 milligram THC drinks in a bar environment. What happens when I've had 3 or 4 marijuana drinks in a bar environment? I leave the establishment, the effects of it hit me in 30 minutes. It's a 45-minute drive home, and I get in an accident, and that now comes back to roost on the bar or tavern. Their liquor liability policy is not going to respond to marijuana impairment. If they have not secured marijuana impairment coverage, they're going to be defending that claim on their own. And that can get very expensive very quickly. And that is, there are policies available out there, but the limits are fairly low. You're talking about, they start at $300,000 limit liability per instance, and the premiums are fairly substantial. So, that's a challenge in the current market. If you are serving THC-based drinks, hopefully you have very good risk management practices and procedures about what do I do when somebody's overserved, how much do I allow somebody to consume, and what does overconsumption look like?
That is a huge point. I can tell you in Colorado, they passed legislation allowing for marijuana consumption lounges with a lot of limits on how much could be served and things like that. But to your point, there is no dram shop liability coverage. In Colorado, as my example, a bar has a I think it's $125,000 limit on liability total if they have dram shop coverage. There is no limit on liability for over-serving somebody THC. So basically, there are very, very few consumption lounges, even though they're legal.
Yeah, I would love to get my little bitty grubby hands on that policy just so I can read it, because I'm a coverage nerd and, I like to read that kind of policy. But talking about impairment and pollution, I'll start off with pollution again, looking at it from a claims point of view. And Norm is absolutely correct with when we're talking about an E&S market. Don't let that scare you if you're not familiar with these terms about E&S and admitted market or non-admitted market or whatever. It doesn't mean the non-admitted market or the E&S excess and surplus market is operating illegally. They are legal. It's just there are different rules. So I happen to work claims in the excess and surplus, the non-admitted market. Lloyd's, for example, happens to be one of those that most people are familiar with. And what they would have is an absolute pollution exclusion, meaning if you've polluted something, yeah, we don't care. We just do not care. We're not going to pay for it. That's all you. And so that's something to know about. And of course, I've talked about the crime where I've handled the crime coverages and the claims that way. Impairment. I've talked a lot with a toxicologist about impairment. And as to Norm's point, it is something that is very different. It is not understood very well, the way the body handles and retains the THC or how it shows up in a drug test. So for example, we normally have the breathalyzer with alcohol, and we, blow, and we'll come up with a particular amount, and the body usually handles that. I mean, it's been scientifically proven. Okay, great. As we're slamming our beer or whatever at the bar, this is how we get intoxicated. With our marijuana, we don't feel that immediately, which is why they're saying, hey, if you're eating that gummy or that brownie or whatever, wait a minute or 30
An hour.
or 60 or an hour and a half or, whatever, because it's going to hit in a little bit. Now, what is interesting and what the toxicologist and I talked about is from a claims point of view, and I know we're talking coverage available, but we're mentioning impairment, but from a claims point of view, that information that you have that you've smoked or eaten or have ingested marijuana in some form or fashion can stay in your system for up to 30 days, which means that if you're a truck driver, for example, and you test positive for THC, but you had it last week, I am going to argue that that marijuana last week has not impaired you. So again, it would come down to your definitions. And I know I'm beating a dead horse, but this is something to again, pay attention to and talk to your brokers like Norm and Ben and look at.
Yeah, the impairment for somebody driving down the road isn't going to come back onto the industry as much as the over-serving in a consumption situation, but it runs into product liability. There are a lot of business operations that just forego that kind of coverage because it's expensive and there's very little return on the investment. But I see that as one of the growth areas. So for this slide's purpose, product liability is available. I wanted to touch on one of these. We don't really, D&O coverage is there for the publicly traded businesses. I have not seen it being very much different than D&O coverage for directors and officers of any other publicly traded entity. There's not really a huge, that I've seen, cannabis distinction. Extraction is here as a separate, but that's under the manufacturing general liability risks. Again, the underwriters are going to come in, and hopefully the fire department's been out, the building inspector's been out. You've got your extraction systems in a bunker because they're high pressure, things like that. But getting that coverage and having a claim in that space can be problematic. We had a very large casualty loss where we lost cooling towers that were $1 million each. And fortunately, we didn't have too much of a coverage fight, but especially with extraction, is the equipment UL listed, and a lot of it is custom equipment. So you have a lot of gaps there and potential coverage issues. The last item, really quickly, a lot of the premises are leased. And you have to look at your lease, your insurance requirements in your lease, and what your landlord is covering, because you're going to end up getting subrogation battles and things like that if you do have a casualty loss in a leased premises.
Yeah. Kinds of claims that we're seeing. Lawyer claims I've handled, cybersecurity time you're going into the dispensary, they're taking a picture of your license, and all that information is going into a database, keeping that private and protected. I'm seeing, as Ben mentioned, product liability, failure to learn, failure to on the what is one serving? Is the whole package one serving? Are they individually wrapped within the package? Is that one serving? A lot of litigation about the effect of taking a THC product and having a mental episode. There was a big case in 2016 where the husband ate the whole package, 100 milligrams of orange ginger candies, went home and shot his wife. And the kids ended up bringing a lawsuit, and it got stuck in coverage and eventually it was resolved. And then, of course, the premises that we talked about. We have a lot of fires, we have a lot of mold, we have water, we have heat, we have electricity, and then the extraction. You know, you're using butane, you're using high pressure systems to get these oils out. So from a lawyer standpoint, that's what I'm seeing.
I would agree. We see all of those kind of claims. Fire is a really big one, and it's mostly because we are growing the marijuana inside. You have to have your heat lamps. One will explode or overheat or something like that, and then that we also have water, because you got to water your plants in addition to putting some sun on them, and that creates a spark. So then you have your fire. This, of course, leads to, like I was mentioning earlier, a lot of different other kinds of claims, which may be smoke. Perhaps the smoke is going up through the HVAC system and infiltrating the drying room. And so that crop is gone. And that also leads to business interruption. So that's another kind of policy that you and coverage that you would need to be looking at. And I don't think a lot of carriers understand that business interruption may not necessarily be from the physical damage of the crop that burned. You know, it's also from the crop, or maybe it depends on your policy. Again, you have to read it. It may also be from that crop that got smoke damage, because again, you can't rub that smoke off. You cannot rub that smoke off.
Yeah, no, I mean, that's a good point. I mean, business interruption coverage is part of a good insurance package that's going to also incorporate crop coverage for an indoor cultivation operation, because one doesn't do you any good without the other. If you have business interruption coverage and you haven't bought crop coverage, the carrier is going to say you don't have a business interruption loss, because the underlying driver of what's driving this loss is the crop, and you chose not to insure the crop. And so if you want your business interruption and a cultivation exposure to work correctly, you have to have crop coverage and business interruption. Your bigger exposure is absolutely that business interruption exposure. It's not the actual crop itself, because the crop itself has a finite value, but the loss of production capacity while you're trying to restore your facility in a post-claim environment is really where a lot of these businesses get themselves in trouble. I can afford to lose a crop. Sometimes I may get a bug or something go wrong with a crop, or particular genetics go sideways, and I don't get the production that I want from a production standpoint. There's not insurance for that. But if I lose my ability to produce in one or more rooms for a prolonged period of time, that can absolutely sink your operation. These guys are operating on very thin margins in a lot of cases. You know, you're borrowing money at a high cost if you're in the cannabis business, because you're forced out of the traditional banking environment, and so you're operating on a much tighter operational.
I want to touch on a couple of things the two of you mentioned. For crop, we talked about this earlier. Definitions count, because there's a difference between a plant that's still in its pot growing, or it's in its substrate, versus something that's been harvested versus finished goods sitting in a storeroom. and you have to be very careful because they're all handled differently. And for people who are not that familiar with the industry, what Norm was talking about was you have different rooms. You may lose one crop, but if you're a big indoor grow, you're harvesting continuously. So you have crops at different stages. You have your clones, you have your vegetation, you have your flower, and different strains in different rooms. And it can get very complicated to make sure that your coverage hits that. And then for Chantal, one of the things that you were talking about, what you have in the grow facilities, you also get a lot of workers' comp claims, and that's something we haven't talked about. You've got environmental, you've got chemicals, you've got regulated pesticides and herbicides and nutrients that you're mixing, that you better make sure you have eyewash stations and that you have a robust claims handling relationship between your production management and your workers' comp carrier. And there are good workers' comp carriers out there.
Absolutely. Yeah, there are good workers' comps for marijuana. And one of the things I would also say to Ben's point when we're talking about the valuation, because I mean, what is the valuation? What is the value of that marijuana plant? I would like to see, as a claims person, a list. Okay, zero, like seed to 3 months, it's $5 a plant or whatever.
It's out there. It's
Yeah,
out
no,
there.
I
The
know it
carriers-
is. I know it is, because Norma, I know you would do it. I'm just saying, for those people who are listening, find, go to Norm.
Well, be aware. I mean, to your point, be aware of what it is, because
Yes.
that may drive your decision making on the value of how much insurance and when you buy it on your crop.
Yes.
And so we don't get too far into the weeds on crop coverage. A couple of things I do want to say on the claims side is, the most common claims that we see today in the cannabis space are trip and falls in a dispensary exposure. That is the most common cause of loss. I mean, yes, we have a lot of smash and grab and property claims, but if we're talking liability claims, most of what you're seeing right now is trip and fall related. In cultivation exposures, we are seeing a lot of fires, as Chantal said, associated with lighting. The carriers have gotten very smart and very, very capable about understanding where the exposure and weaknesses are in some of these lighting schemes. And the carriers are now starting to ask questions about what kind of ballast do you use? How often do you change out your light bulbs? If you're using high pressure sodium, you're not replacing them every 8,000 hours. I know you're prone to a fire because the life expectancy on one is about 9,000 hours. And if you're not replacing before you get to that point, we're just playing roulette. And so while that's going on, the thing to keep in mind, Ben's talked about it a couple of times, product liability in a lot of regulatory structures, it's required. In a lot, it's not. And the thing I will tell you about cannabis product liability is it's ridiculously cheap right now. If you are not buying it, you are making perhaps a poor business decision that could come back to haunt you and your company. Product liability in the cannabis space right now is cheaper than insuring vitamin C. On a cost per thousand basis, I will tell you, in the last 5 years, I have not delivered a rate increase to a casualty client. And I've placed thousands and thousands and thousands of policies. Unless you've had a claim on the property side, your general liability, product liability rates are cheaper now than they have ever been, and they're cheaper than comparable products. You want to be aware of what you're buying. As we said, be aware of the definitions. But that coverage is available out there. We are in a pre-claim environment. The defense bar is absolutely staging and ready to pounce. They're watching a couple of cases that are going on actively in the courts right now, with the intent of following suits depending on how the rulings go. So product liability claims are coming. And when they come, let me tell you, a cannabis operator does not make a sympathetic defendant. You're going to be painted as the federally illegal drug dealers selling bad gummies to kids. They're going to spin it any way they want. and you need an insurance carrier behind you covering your assets to make sure that you can focus on your business.
We have-
One other thing that we didn't talk about was employment practices liability.
That comes next.
I work with the HR
Yes.
department a lot, and everybody, I mean, it is ubiquitous in all industries now that, especially if you have retail employees, you're going to get claims. The one comment, because I know we're short on time, is make sure the deductibles are manageable. I've never exceeded the deductible ever in the 6 years I've been doing this. So you're paying for the insurance to avoid the catastrophic class action wage and hour issue in California or something like that. But I still carry the coverage.
We skipped a slide, coverage trolls. What's a coverage troll and how do you deal with it? Yeah.
The two categories I've seen are ADA accessibility and things like Telephone Consumer Protection Act liability. If you have a whole cottage industry around claims that your website isn't accessible to the visually impaired, or in the TCPA that you're sending out email blasts that are spam calls. And there are people out there just getting on websites to see if they're compliant and then filing lawsuits.
The claims that I have seen from the coverage troll, so to speak, is with the ADA again, but it is for handicapped or access. And they go around, and it started off in California, and I believe it's working its way west or east. So that's what I've seen.
All right. In our last 5 minutes, I like to do let's predict. And so I'm going to give each of you an opportunity to make any type of predictions or share with our audience that perhaps we didn't cover on the slides we talked about. Ben,
I think we did cover
a
this.
chance to touch on or things.
Sorry, you broke up and I stepped on you. I think that the product liability we touched on, that is going to be the growth area here. The trolls are always going to be there. If they're making money, they'll come after it. Once rescheduling occurs, God willing soon, and you have hopefully safe banking, the pockets will get deeper. Right now, cannabis companies do not make money. It's all a bet against rescheduling, legalization, safe banking. And once the pockets get deeper, the product liability people will show up.
Mhm. Yeah, I guess I can go next because I don't know if Melissa's frozen or not. What I would guess or hope, of course, for me, would be that once it becomes legal, you're going to start seeing a lot more claims and a lot more lawsuits. I unfortunately know several adjusters who like to just deny claims because of the illegal activity language that still appears in a lot of policies. And that, of course, is not the intent of the underwriters. I think that's gambling, Russian roulette kind of deal. But I think that there are going to be a lot more lawsuits and a lot more claims. I think people are afraid to bring their claims and their lawsuits right now specifically lawsuits because they don't want the federal government to know about it, or the government getting into the business and all that kind of stuff. So I think you'll see a lot more people pressing this sort of thing.
Norm, last thoughts.
If I put on my Mr. Wizard prognostication hat, I think we're going to see a lot more expansion of hemp-derived products in lots of places that we would not traditionally think of it being. I mean, Minnesota is, while it's progressive, it wasn't necessarily on my radar for jumping as far forward as they have. And now we're seeing other states start to do that, introducing hemp THC products to a broader public outside of a regulated dispensary model. And as that happens, I think that, it normalizes the product, but it also forces us to address coverage questions on the insurance side around where that is, and to the Schedule III piece, I think we're a ways off, in my opinion, from seeing real resolution of what they're going to do with Schedule III and how that looks. Because yes, if marijuana becomes a Schedule III product, yes, that means that they're no longer getting penalized under 280E of the tax structure, which makes them pay these ridiculous tax rates with no write-offs. Yes, that goes away, but Schedule III traditionally has been run by pharmaceutical companies. Ketamine is a Schedule III drug. You don't see ketamine dispensaries on the corner or state-run ketamine products. And so how does regulated marijuana that's out there feeding these states $1 billion in tax revenue annually per state in a lot of cases, how does that coexist with a Schedule III structure? That's a lot of work to do in the next 12 months. I think we're a ways off from that. So I look for a lot of growth opportunities in the hemp, CBD, nutraceutical markets. And I think that's a lot of where the industry's focus right now is.
And Norm, you triggered a negative prediction on my part. I don't see a national legalization coming in the next decade or more, simply because the states are so entrenched and they're making so much money. And you're going to have, with multi-state operators, having to deal with differing state regulations. I mean, not just medical versus adult use, but down to the regulatory level. And that's going to keep the industry very complicated.
All right. And that's a wrap. As always, Norm, Chantel, Ben, you guys are pros in the field.
Thank you.
We're going to sign
Been a
off.
pleasure.
Thank you.